Hello, 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 hello. Ah, same thing. Let me quickly fix my camera. There it is. Hello, everyone. How's everyone doing? How is everyone doing? Good start to the weekend, hopefully. Hello, hello, hello. Good morning, good afternoon, good evening. Good evening, I imagine, to most people. Hello, hello, hello. Hello, Chop. Hello, Noor. Hello, Benedict. Hello, Prezzo. Nice to see you. Hello, Milan. Hello, Christian. Hi, hello, hello, hello. All right. Hello, Dr. Frequency. I'm doing good. Thank you very much. Thank you very much. All right. Good night. I'm doing good. Thank you. Thank you. Hello, Emmanuel. Hello, Faisal. Thank you very much. Thank you. Thank you. Thank you. All right. Hello, Don. From Germany. Love to see it. I'm in the Americas, the left side of the world. So we're old neighbors. Don. From Germany. Love it. Hello, hello. All right. For today, there's a few things I wanted to dive into. You already briefly saw the topics list as well. We're going to dive into the US dollar, how that reflects also on the Forex majors and Forex in general. And we're going to dive into the metals, a little bit of gold. We're going to dive into the indices as well. Just going to share my thoughts. We're also going to dive into questions. So let me pull it up right here. Oh, nice. I see people are already finding their way towards the questions. Lovely, lovely. If you do have any questions, there's a link in the description. You can also join. Oh, let me see. I'm not sharing my screen. There it is. There it is. The questions right here. You can join right here. There's also a link, first link in the description where you can ask a question. Again, we're just going to go over the most popular ones. So if you give a thumbs up to a question that you really want to have answered, we're more likely to go over that question as well. So if you do have any questions, feel free to ask me. Feel free to let me know your struggles. What did you struggle with in the past week? And we can dive into it. We can dive into it. So let me know. Let me know. If you do have any struggles, feel free to let me know. I'm doing good. Thank you, Marvelous. Thank you. Thank you. I hope you're doing good as well. All right. Perfect. 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 Let's dive into it, shall we? Let's dive into it. Let me first do my recap, and then afterwards, we're going to dive into these questions. Again, link in the description right there, and you can find the questions. All right. Let's see what we have. Okay. First of all, let's dive into the dollar. There's a few things we mentioned in the forecast. So I'm just going to dive into essentially what we talked about in the forecast, which I think is very important. So where did we head off essentially? What did we talk about in Sunday's forecast? We talked about this daily fair value gap, and that in the short term right there, it does seem like we're bullish, but there were multiple options, right? So every time you open a chart, there's multiple options. And what I mean by that is that there's multiple things of what can potentially happen. So for example, we mentioned on Monday or Sunday right there, we mentioned that we could already continue higher like this. We could also retrace back into the fair value gap to disrespect it, to then continue lower. We could also trade back into the fair value gap to then continue higher and respect it. Now, that third option, so the latter option, that is exactly what we saw. So we saw us retrace back into the fair value gap to then continue higher. Now, what is important to understand right here? A couple of things important to understand. That once we retrace back into this daily fair value gap right there, it becomes a parameters game. So what do I mean with it becomes a parameters game? It becomes a parameters game because you just need to set your parameters, walk away, either the alerts go off, and if the alerts go off, you act. Otherwise, you don't act. So right here, we simply wait for either this low right there to get a run below it to then continue lower, or what we do is we start taking a look at these highs right there. If we start running these highs, then we can potentially continue higher instead. So it's either we run this high or we run this low right there. If we start running that low, which is the option that never played out, then we are running the previous candle low right there, which means that we are disrespecting this fair value gap based on 2-candle rejection, and we can actually already start to continue lower right there as well. If that never happens, like it never happened, and we start running this high, we can start looking at buys right there. We can start looking to long. So then the next target becomes all the highs that we have towards the left right here. For example, this one. For example, eventually that high right there as well. That's exactly what we see. And if we take a look at, for example, how that is reflected then, for example, on these majors. So for example, Australian dollar, US dollar, EU, GU, New Zealand dollar, US dollar, etc. What is important to understand right here is that as a group, Australian dollar, US dollar, Euro, US dollar, so I'm going to mark them out with blue right there. As a group, these are then going to be bearish. So move lower. But that doesn't mean that they're equally as interesting. So for example, what you'll notice is if we take a look at Euro US dollar hasn't been moving lower as aggressively in comparison to, for example, a New Zealand dollar US dollar has been moving lower a lot more aggressive. Same for example, a GBP US dollar. Same for arguably Australian dollar US dollar right there. So what that means is that the moment the dollar becomes clear, so the moment we start running these highs right here, essentially this area, right? The moment the dollar becomes clear right here, then the moment that becomes clear that the dollar is bullish, we want to take a look at shorts right here on, for example, these blue pairs right there. But what is important to understand is that if a Euro US dollar is a little bit stronger than a GBP US dollar, I would prefer to trade a GBP US dollar. The reason why is because GBP US dollar has an easier path to continue lower right there. For example, the weakest of them all was New Zealand dollar US dollar, had the easiest path right there to continue lower as well. So the reason that is quite important to understand is because you're more likely to run into a loss, for example, on Euro US dollar, even though we do still continue lower right there. So that's quite important to understand that by picking the right instrument to trade, that's already half the work done, if that makes sense. Just picking the right instrument, the weakest one in this case, that's very important to understand. That was quite straightforward. And again, I think it's quite straightforward as well because we somewhat already expected it. So on Sunday, what is important for your own trading to do as well is you set these different scenarios out. Okay, if we do retrace back into this fair value gap, there's two things we can do. We can either disrespect it right there or we can respect it to continue higher. So because we already discussed it on a Sunday, it's not really a surprise if it happens. You know what you should do at that moment in time, if that makes sense, right? So what is important right here is that then it just becomes a matter of, okay, let's see which one is the weakest, which one can we profit from? How can we profit from that move? That is important to understand. All right, so if we then move on to, and that's the same story essentially, for example, US dollar, Canadian dollar, by the way, right? For example, US dollar, Canadian dollar was also quite interesting right here. Had a beautiful move here to continue higher towards that next target as well, whilst the dollar was also moving higher at that moment in time. It was very nice right there. Now, before we dive into the gold, I also want to go over the indices right here. I think the indices were a little bit more tricky this past week. If we, for example, take NASDAQ as an example right here. In a week like this, where we are moving lower, essentially. Now, I need you to understand something. We talk about this all-time high protocol, right? A lot. So what is this all-time high protocol? Essentially, in a nutshell, it's if we can overtake these fair value gaps right there, we have a clear path again to continue higher towards the all-time high. That's it, right? Okay. So if we consistently apply that right there, then you're going to be on the right side of the market a lot of times. Now, right here, what is important is that, for example, we have this fair value gap and we also have this fair value area where we see the first candle is somewhat of a rejection right there. If we mark out that low right there through that Thursday's duration right there, we arguably disrespect the fair value gap, the fair value area right there to potentially continue lower. Target the next lows right there. So what happens is you're essentially doing the same thing, all-time high protocol, but just reverse it. So you're just trading in between PD rates, what we talk about in the daily bias video as well. So when you're trading in between PD rates right here on, for example, a NASDAQ to continue lower, you do need to take into account and understand that that is lower probability at all times. So for example, right here is we have a couple of times where the price action to continue lower right there was all right. It was more so overnight, so it was not necessarily during equities open as well. But what is important to understand is that it reminds me a lot of summer price action, for example, or December price action. Why? Because December price action and summer price action, usually what tends to happen is that oftentimes you get these very nice fair value gaps, seemingly nice fair value gaps that we can potentially continue lower from. And what happens, we do the complete opposite and we then start to consolidate right there. And why is this? Well, there's a simple reason why this is because the bullish momentum is still stronger at that moment in time. So for example, what is also important to understand, trading back into a fair value gap like this, that's not guaranteed, right? The reason why the fair value gap gets created is because we had bullish momentum right there at that moment in time. So it's much more likely that we are still going to continue higher. Now, if we struggle to overtake these fair value gaps right there and we do continue lower, for me, for my trading plan, that's a sign to not do anything. So just sit on the sidelines and just wait, essentially. So that's why this week for me also was arguably a little bit more tricky, but again, it's just waiting at that moment in time. I would rather see the move like this. So for example, if we have the fair value area right there, heading into next week, if we can start running this high right there, and this is going to be interesting to me to then continue higher towards those highs. But the shorts right there for me are a lot lower probability. So for you as well, I need you to understand, if you're trading against so much bullish momentum like this, and you're looking at shorts, really only trade that if you have data supporting the ID right there, because otherwise it's so, and of course, in general, we want data supporting the ID to trade something, but it's not as straightforward as you can simply trade these shorts right there to continue lower, because arguably it's lower probability. And Bradley, MMT member, knows about it. Yeah, tough week, basically no trade for me. Same. It was a tough week. It was a tricky week on the indices, in my opinion, as well. And the same goes for example, an ES right there. The same goes for a Russell right there as well. So for me, it was a lot of waiting, setting alerts. But again, I also need you to understand there's nothing wrong with that, right? There's nothing wrong with that. Weeks like these happen. But I need you to understand something. The difference, for example, between a Bradley who I know is very profitable, and then comparing that, for example, to someone who just starts out with trading. The difference between Bradley, a professional trader, and someone who's just not that great at trading just yet is that in these weeks, they can recognize I don't do anything. I protect my capital. So the difference is right there that a beginning trader or more beginning trader will essentially lose all their profits in weeks like these. That's very important to understand, because weeks like these happen, but it's about protecting your capital. That's so important. That's so key to understand. So right there for ES, NASDAQ, and the indices in general, a little bit tricky as well. If you do have any specific questions, of course, feel free to ask me right here as well. Link in the description and we can dive into it. All right, let's see. Then lastly, I want to go over gold before we dive into the questions. Now gold, for some reason, in the past, I believe 3 weeks, I believe this is 3 weeks in a row right now, that it becomes interesting on a Friday and quite late on a Friday as well. So for example, what we see right here on the gold is that we have this order flow resistance against us, more specifically the fair value area right there. We start running the rejection high, well, today, essentially. We start running it right there. If we zoom in a little bit more as well, on the 50-minute, you see this quite nicely, rejection, and we start to continue higher right there again. That's where we start running it today, quite late on a Friday as well. And that's exactly what we saw. For example, the same thing happened, what we talked about during the forecast. So right here, we have this fair value gap right there. We have the rejection high that we start running right there on a Friday. On Monday, Sunday, we open up right there to then start targeting the all-time high again right there. It's very similar what happened this 2 weeks ago, right here, where we start to overtake this fair value gap, run the rejection high very late on a Friday right there. And then on a Monday, we finally start to continue higher towards the all-time high again. Very, very interesting. But that's essentially also a very similar story on gold, where for majority of the week, we didn't really do anything. We didn't really make any relevant moves happen, if that makes sense. It was a lot of struggle right there to continue higher. It was a lot of struggle to continue lower as well, consolidations. At these moments in time, it's just about waiting. and knowing what you're waiting for. So very similar to, for example, an ES, to, for example, a NASDAQ. It's about waiting, for example, for these highs to get run right there to then continue higher again. But know what you're waiting for at that moment in time. That way, you can also more easily, in my opinion, simply sit on the sidelines and act, or not act at that moment in time. Know what you're waiting for. So it was a very similar story on gold right there, where today, this was quite interesting. That in itself is already an opportunity to continue higher as well. But at the start of the week, this in itself, like we mentioned on Sunday as well, is already an opportunity as well to continue higher towards those highs as well. All right. For the rest right here, silver was also not too bad, in all honesty. Actually, this Friday is quite interesting right there. So what we see, for example, is we have this next target, the next swing high right there. Provided created against us 1 hour, start running the rejection high to then continue higher again right there as well. Quite interesting, actually. Quite nice. Quite nice. All right. Bitcoin essentially continued lower. So this is exactly what I mentioned, by the way. What I think is very important to understand. Remember how on Sunday we talked about this suspicion that this fair value gap might fill right there. You can never act on a suspicion. You always act on the facts that you are dealing with at that moment in time. So right here, the fact is that token objection was still intact, still not failing from this weekly fair value gap. Only if we start running this rejection high right there. In the meantime, we are still respecting this weekly fair value gap. So you never act on a suspicion. Again, very important. Crude oil right here, to me, not that interesting throughout this week. I didn't really look at it, in honesty. I was mainly concerned about gold and also the indices right there. All right. Let's see. Yeah, could be, Asrin. Sometimes we just consolidate. I'm not really concerned about always having a reason as to why we consolidate. Sometimes we just have a week like this. It's part of the game. Let's see. Let's also dive into the questions right here. Let's see what we're dealing with. All right. Again, I'm going to work my way down the popular questions right there. If you do have any question for me, then feel free to go to the link in the description or right here on the left side right there as well. All right, let's see. Thank you from Japan. Thank you. Good night to you. Good night. Thank you very much. I can't pronounce your name. I hope you can understand. I'm sorry. Okay, let's see, Tom. I trade gold, Euro US dollar, and ES through the flow trading plan. Okay. I am unsure which time frame, the 1 hour, the 4 hour, the daily, weekly, is best suited to determine my bias. Which bias is the most important for me? Good question. Good question right there. Okay. So no matter really what trading plan you are trading, whether that's a flow trading plan, whether that's really focused on the higher time frame in general. So for example, what we mention oftentimes, a filtering process trading plan, no matter what trading plan you focus on, you always want to start on the higher time frame right here. So for example, if you trade flow, the way I would approach this on, let's say, an ES right here, we can understand the monthly, the weekly right there is quite bullish. I don't think we have to really discuss that, right? We can take into account that we have right here this weekly fair value gap as well. We could potentially retrace back into that, but let's not force the ID. Then what I want to focus on right here is working my way down time frames until I find this resistance against us right there. Okay. Because at this moment in time, if we want to continue higher, then this resistance is essentially blocking us from continuing higher at this moment in time. So how can we overtake that? Well, by running the token rejection high right there. So if we now start running this high, then the bias all of a sudden becomes clear. And the moment the bias becomes clear right here, if we start running this high, then we start trading in between the PD rays essentially. Okay, so the next target could be these highs. Next target could be these highs right there. And every single time you trade in between these PD rays, that's essentially where the bias becomes clear. So I would highly advise to watch a daily bias video as well that we made, because essentially the same thing applies. Now, what you want to do, you want to have an understanding first of what the higher time frame is potentially doing. I think that's very important to understand, because once you have an understanding of what the higher time frame potentially wants to do, then it makes it a lot easier to navigate the lower time frame. Because the biggest mistake that I see a lot is that people dive into the 1 hour, into the 15 minute right there, and then try to make it work. imagine how many times you get tricked into the market right here. For example, bullish fair value gap right there that we can continue higher from. It fills. Okay, well, maybe we want to continue lower right here. Okay, bearish fair value gap right there. It fills as well. And we continue higher right now. And if you consistently do that, then it's very hard to make that work profitably, if that makes sense. So that's very important to understand, that you don't just dive into the lower chart like this. The 15-minute makes a whole lot of sense if we now understand we potentially want to run towards this high right there. Then these fair value gaps right there make much more sense to now potentially continue higher, if that makes sense. That's very important to understand. Let me know if that makes sense to you, Ton. So about probabilities. I always like talking about probabilities. What I think is very important to understand, I think this is very interesting. For example, anytime you look at the chart, the probabilities are very different. So what is probabilities? Let me first start off. Let me start off from just the start. Okay, what is trading? Trading is probabilities. That's all it is. So trading is not some magic pattern or magic thing that works 100% of the time or anything like that. It's all probabilities. So if you, for example, consistently find the highest probability thing that the market will potentially do, then you're very likely to be profitable because you're constantly finding the highest probability thing to do, if that makes sense. So how do you find the highest probability thing to do? I like to break that down in arguments. Now, this is where we're going to dive into a little bit more advanced material as well, so stick with me. Okay, so what are arguments? I think the market is constantly showing you arguments. It's constantly making arguments. Now, what am I talking about? How does that make any sense? Imagine when you open the chart, you are the judge. You're in the middle of a courtroom. On the left side of you, you have the bearish side, the bearish team. On the right side of you, you have the bullish side, the bullish team, if that makes sense, right? So what is your job as a judge? You're going to listen to both parties, their arguments, and you're going to decide based on the facts that you have, which side is higher probability, which side is more likely to be right, right? That's essentially what it comes down to. So when we understand that, how do we apply that to the chart? Okay, so I open this chart right here. How am I going to determine that? Well, what are these bearish arguments? What are these bullish arguments? When we create a bearish fair value gap, what does the bearish fair value gap imply? It implies that we might want to continue lower, right? Okay, so we have this bearish argument right there, a 4-hour bearish fair value gap. Then I zoom out to the monthly right here. On the monthly, I see a lot of bullish. And you would, of course, first go over the monthly. I see a lot of bullish arguments right here because I see bullish fair value gaps. On the weekly, I see the same thing. On the daily, I arguably see the same thing. I don't see any bearish fair value gaps right there. Okay, so this bearish argument right there on the 4-hour time frame is the only bearish argument that we could arguably find. Okay, so if we now start trading right here, this area right here to potentially continue higher. Whoa, this is new. It's quite nice from trading view. Anyway, if we start to continue higher right here, is this very high probability to now continue higher? Not necessarily. Why? Because we still have a bearish argument in place. So we could still continue lower right here from these fair value gaps. We could still continue lower from like this. So if we take away the bearish argument right here, then there's only bullish arguments left, right? So if we now, how do we take away the bearish arguments? By disrespecting these fair value gaps, by disrespecting these fair value areas right there. So if we start running this rejection high, and the only thing we have is bullish arguments. That's also what the whole all-time high protocol is based on. Just consistently only having those bullish arguments. And if you only have those bullish arguments, well, then who are you going to side with? If you are that judge in the middle, well, likely the bullish side, right? At this moment in time, you would also likely, and this is where probabilities come in, because probabilities, there are many different types of probabilities. There is extremely low probability. There's also high probability, but then there's also the highest probability. There's different types of probabilities. You can calculate it. So at this moment in time, right here, the probabilities are also that we are more likely to continue higher based on the bullish arguments that we had on the monthly, the weekly, the daily right there. But there's one bearish argument. So for example, if you calculate that, then there's 3 bullish arguments. There is 1 bearish argument. So that means we are 75% bullish at that moment in time. So there's a 75% chance that we are likely going to continue higher based on the arguments that we use right there. If we take away this only bearish argument that we have right there by running the rejection high, then we're left with 4 bullish arguments, because also the 4-hour right there turns into a bullish argument. So then your Well, again, when I say 100% probability, of course, is anything 100%? No, but you are getting closer to 100% probability. So a lot higher probability that we are going to continue higher right there, if that makes sense. That's how probabilities work. So the market is constantly giving you these probabilities. The same way, if we take a look at GBP US dollar right here, can we continue lower? Well, based on the previous price action that we had, based on the arguments that we have, yes. But there's one bullish argument, that we are respecting this swing low, that we are potentially sweeping it. So if we take away, for example, if we take a trade from this bearish fair value gap right there, that is lower probability because we have a bullish argument at that moment in time. Then, for example, if we start running this swing low right there, that becomes higher probability because the bullish argument is gone. That's very important to understand. So that is essentially how these probabilities work and how we can essentially objectively, or more so objectively, understand whether you took a good trade, whether you took a bad trade, because it's all about these arguments right there. And that's very important. That's very important to understand. So that's how we somewhat turn the subjective into objective, because those arguments, they make the probabilities. I hope that was your question as well. It was open for me to interpret, so I ran off with it. Let's see. Let's see what we have. Okay, this question, let me know if it makes sense then. Let's see, Captain with the... Okay, perfect. I'm noticing in FX, Forex, that large expansions are occurring on no news days, while red folder news days are just wicking all over the place. What's going on? Thank you. What a perfect question. I have the data right here. I have the data. Let me zoom in actually. That's so perfect. I have the data right here, talking exactly about that. Yeah, that's a great observation, my friend. That's a great observation. This is a video that will come out Sunday. So this Sunday, hopefully. And again, this is the data right here supporting that ID, the Trump data. So yeah, you're completely correct. We're going to dive more into it in the video to fully explain it as well. But essentially what we're seeing, if we compare the periods, for example, under Trump and Biden as well, under Trump, we are a lot less reliant on news. So Trump can say something or can do something or can essentially, I don't know, knock on his office desk and the market will move very aggressively. And so the volatility, essentially to sum it up, is a lot more unexpected. Where previously we had a lot more under Biden, for example, we had a lot more expected volatility. So what that means is that red folder news, orange folder news days, they are more likely to be volatile. That's not the case anymore. That is, well, at least, of course, that could change, but at this moment in time, that's not the case anymore. Under Trump, the volatility is a lot more unexpected, doesn't have to do anything really with Forex Factory, red folder, orange folder news. Super interesting, but that's super interesting that you noticed that, because we also noticed that and we gathered some data on it. So yeah, very nice, very nice. For Sunday, we're going to dive into it. Let me know if that makes sense, Captain. ASR, let's see. If your trade is not 1 to 2 RR, or you mean 1.2 RR. I assume 1 to 2 RR. Let me show my screen. Excuse me. There it is. Okay. Is it worth taking the trade if it's, let's say, 1.5, 1 to 5, 1 to 3 RR inside an area of opportunity? If the trade is not 1 to 2 RR, is it worth taking the trade? I'm not sure what you exactly imply right there. If your trade is not 1 to 2 RR, is it worth taking the trade? If it's, let's say, 1 to 5 or 1 to 3, or you mean 1.5, 1.3? If that makes sense. Let me see. I'm going to interpret it. If I answer it completely wrong, or well, if I don't understand your question, then feel free to let me know. Feel free to let me know, ASR. And feel free to ask again. If your trade is not 1 to 2 RR, is it worth taking a trade if it's, let's say, 1 to 5, 1 to 3? For me, again, it's important to always stick to 1 RR right there. That's the first thing I want to have mentioned. If my trade is within the area of opportunity and it's not 1 to 2 RR, then I still take it, but make sure that once the area of opportunity is essentially over, you are break even. So for example, the moment you take a trade right here, because this might be your area of opportunity right there. And let's say the 1 to 2 RR stretches further right here. And this is your main target, right? then I want to be break even by the time we reach that low, because something like this could happen. We could sweep the low to then continue higher again right there. So that's essentially what I want to focus on right there. So right here, to answer the rest as well, it's worth taking it if it, let's say 1 to 5 or 1 to 3 are. This is better. So if the trade inside the area of opportunity, that's what AOP, by the way, see the question, AOP, area of opportunity right there, is 1 to 5 or 1 to 3 are right there. For me, that's better. But I wouldn't take a 1 to 5 or a 1 to 3 RR trade, if that makes sense. I would just capitalize on 1 to 2 RR right there. But that just means there's more room to work with. So since there's more room to run, if that makes sense, it's more likely that your 1 to 2 RR trade will also play out, if that makes sense. So that to me is even better right there. If we can potentially focus on a 1 to 5, 1 to 3 RR, but I personally wouldn't target. I would just stick to 1 to 2 RR right there, if that makes sense. Let me know if that was your question, if I interpreted it correctly as well. Overall, by messy charts, too many lines, fair value gaps, and fair value areas across timeframes. Any tips to keep charts clean, structured, and simple during the trading session? Yes, for sure. Good question. Very nice question. So what I like to do is the first thing, because over time, what you'll notice as well, for example, crude oil, very good example. Over time, it gets messy. And what I mean by that is you have all these different lines that are not necessarily relevant anymore. I still have an old trade right there that I took as well on the chart that is not necessarily relevant anymore. Just completely delete it right there, completely delete it. Now in your trading view, you can also do this very nicely if you have the left side right there on and the trash can right there. Just click on it, remove everything essentially. When you start doing that and you start to essentially redo your analysis, so if I do like this and delete it again, then you're only going to now start marking out the relevant parts, if that makes sense. So what is truly relevant at this moment in time for me to take a trade? It's this fair value area right there. Yes, that is relevant. I like to mark out to have a little bit less clutter just with a line right there, because the box takes a lot more space. And then this rejection high right there. Then you could mark out the area of opportunity right there, but that's about it. That's it. That's the only thing I need on my chart at that moment in time, if that makes sense. So it's 3 objects, you could argue. And I don't really need the area of opportunity because I already know if we start running this rejection high, this is the only thing I need right there, if that makes sense. So that's the way I go about it. Only marking at that moment in time the relevant parts. Because a lot of times what happens is that people go into the lower time frame right here, and they also start marking out this fair value gap right here. Okay, let me also mark out this fair value gap, this old fair value gap right there. We do something like this. Let me then start marking out this fair value gaps. And then it becomes very overwhelming. But it's overwhelming because you're focusing on things that are not relevant at this moment in time, if that makes sense. And that's very important to understand. So only, and I think this starts actually, when I think about it, it starts with understanding what is relevant at that moment in time and then marking out those things. That's it, essentially. That's it. So if you understand that, then it becomes a lot easier to keep your chart quite clean as well, if that makes sense. It's a good question. Good question. All right, let's see. Let's see. I see this question, by the way. The hate that Fridays, let's see. The hate that Fridays get for not being tradable days, is that justified? Do you usually trade Fridays? It's somewhat justified, yes, but it does depend on your trading plan. So, for example, if you just start out, it's not justified. You have no reason to hate on a Friday because you have no data supporting the idea that you shouldn't be trading Friday. That makes sense. Now, oftentimes, what you will notice is that Fridays, for example, and I forgot to mention this, my bad, but when we have already been expanding, so we have been moving higher aggressively in these cases, then what tends to happen is that Friday is also a little bit lower volatility, if that makes sense. So that's very important to understand that is a rule that generally stands and is quite justified, if that makes sense, for the hate on Friday as well. That if we have already been moving higher quite aggressively right there, then Friday is sort of this lackluster day where everyone is done with the week right there, doesn't want to move anymore, doesn't want to move in the same direction anymore. So that's quite important to understand. Other than that, for your own data, you just need to gather the data. So you just need to start trading. And if you don't have data supporting the ID or not supporting the ID, that Friday is bad for you or is not good for you, or is bad for you or is not bad for you, sorry, then just trade it. Just trade it. And sooner or later, you will find it out. You will find out, according to your data, specifically tailored to your data, if Friday is bad. Yeah, I think that is very important to understand. There's a few key psychological things. So Space Pete right there, thank you very much. Mentioned my rules never overtrade on a Monday or Friday. That's a good rule. I would argue never overtrade to begin with. No, but I understand what you mean. What I think is very important to understand, Mondays and Fridays play a very important psychological role. So for example, if on Friday you take a lot of losses because you're trying to either gain extra profits or you're trying to make up for your loss throughout the week, Friday is not for that. It's better to head into a new week and then try to potentially recoup the loss, if that makes sense. Because Friday, if you go into Friday and you take a lot of losses, then you're going into the weekend with a bad psychology. And you're going to up on a Monday, for example, with bad psychology because Friday was bad, if that makes sense. And then it turns into this bad cycle, essentially. So I always see Friday is this bonus. If there's a really good trade opportunity, I'm going to take it. But other than that, I'm just going to chill. I'm just going to see. The market really needs to convince me. Otherwise, I'm not doing anything. Monday, and that is also quite important because Monday, you want to build up your confidence, if that makes sense, heading into the week. So if Monday, you already start to overtrade or you start to lose a lot of trades, you're setting up yourself for failure, essentially, for the rest of the week, if that makes sense. That's also quite important. So Monday, Friday, quite important regarding psychology. Actually, when we dive into this data as well, some interesting data, Monday in recent times, so Monday is also quite known as a low volatility day, which in the past was true. Monday is one of the most volatile days. If I'm not mistaken, it is the most volatile day of the week, actually, under Trump, which has been very interesting as well. But that's some data for Sunday in the video that we are going to dive into. All right, let me know if that makes sense. Hello, Asif. Hello. I'm doing well, thank you very much. How are you? If possible, could you please explain how to identify two candle rejection failures on one time frame below? Thank you so much in advance. Okay, quite straightforward. It's the same thing. Same thing. So if we, for example, take a look at NASDAQ and we also take a look at this fair value gap right here, it's the same thing. Same thing, but just the time frame below. So if you go into the 1 hour right here, you'll see two candle rejection is also just being respected right now in the 1 hour. Now the tricky part right here, so where it becomes tricky is if you go down these time frames. For example, if I, let's say, go into the 50 minutes to understand the two candle rejection, sometimes, or 5 minutes, well, it's not a good example. Two candle rejection works too good right there. There's two candle rejection on every time frame. It's not a good example. Anyway, maybe the 1 minute. Okay, maybe the 1 minute right there. But if you go down time frames right here to now understand if two candle rejection is failing or not, then oftentimes, if you don't have the experience, you will see two candle rejection failing too early. So for example, if 1 minute two candle rejection right here is failing, and then based on that, you say, okay, this fair value gap right here towards the left is failing, you still need to take into account the rejection on the higher time frames hasn't happened yet. So a 4 hour rejection could take a little bit longer right there than, for example, the 1 hour. So that means that if the 1 hour two candle rejection is failing based on a 4 hour fair value gap like this right there, then still take into account that the 4 hour has not created the rejection just yet. So that could still happen later on. The way you see that is by understanding if on the 1 hour we already start to create these fair value gaps right here to continue higher or not. That's important. So that's why it can be tricky. So if you start experimenting with that, that is quite important to understand. Let me see if I can find an example right here. Yeah, arguably quite a good example. So we have this fair value gap right here. Two candle rejection right here arguably starts to fail, maybe even earlier. I'm not too sure where the fair value gap is. There could also fail earlier. Again, perfect example. Because here you might assume that we are already failing two candle rejection, so the fair value gap is being disrespected. But then what happens is the rejection on the 4 hour takes a little bit longer right there. Two candle rejection is still intact, if that makes sense. That's important. Very nice, Nizar. I assume that you took a trade right here from 50-minute fair value gap right there, targeting the high as well, potentially going into the lower time frame right there. Quite nice. Quite nice. Congratulations. All right. Let's see. If you could only choose one day of the week to trade out of Tuesday, Wednesday, and Thursday, which one would you choose? Most likely, it's a difficult one. Most likely Tuesday, and that's purely based on the on the big 3 news events. So for example, on Friday you have NFP, so that's 1 week where Thursday is potentially already a little bit lower probability. It depends a little bit. It varies because sometimes we do have CPI on a Tuesday as well, but then afterwards that's quite interesting to trade on a Tuesday. Sometimes CPI is on a Wednesday or a Thursday, where Tuesday is then not interesting. Sometimes we have FOMC statements on also, for example, a Wednesday, so that makes Tuesday also quite hard to trade. So for me, if I had to pick one, it would probably be Tuesday, also the start of the week, so that's arguably the most interesting in my opinion, if that makes sense. But in general, I don't. It's not really that I prefer a day. So if I really had to choose, it would be Tuesday, but I don't really prefer a day, if that makes sense. There's not one day that really stands out that I want to trade on, if that makes sense. All right. Let's see. Hello. Are order blocks still valid as price keeps on respecting them? It depends. It depends. If we have, for example, a fair value area right here, which fair value area, I like to call it as an order block, essentially, same thing. If we trade back into this fair value area right here, and we start running the rejection high, then we are not respecting it anymore. But we can only trade back into it once. So that is the open. And that is either based on the fair value gap that's overlapping, or if there's no fair value gap overlapping, like for example on NASDAQ, then it's the body right there for me. So if we run the rejection high right there, we are disrespecting it. As long as we respect the 2 candle rejection that we have right here, if we sweep the high, for example, we're still respecting it. But for me, it's important. For example, when we sweep this rejection high to continue lower like this, we're not rejecting from the order block anymore or the fair value area. We are rejecting from the swing high that we're sweeping. So I think that's quite important to understand, because a lot of people try to then justify it with these 80% levels, etc. But oftentimes we just continue lower from the PD rate that we have created right there already, if that makes sense. In the same way, if we now continue lower from this swing high, we're not continuing lower from the fair value gap, we're continuing lower from the swing high that we're sweeping right there. That makes sense. All right, let's see. Let's see. If inside the area of opportunity, you can't reach 1 to 2R, should you take 1.5? Okay. That makes a lot more sense. No. Take the 1 to 2R trade, go break even once we reach the target, but don't, because otherwise what you're doing, you can potentially do this if you have data supporting the ID to do it. Again, data overrules any opinion of anyone. But what is important to understand is that if you don't really have data supporting the ID and you're now going to target less RR, then what's going to happen? You're going to skew. You're going to mess with your trading plan, if that makes sense. So your trading plan then might be profitable, but because you target less RR based on the trade that you take, you might not be profitable, if that makes sense. So that's quite important to understand. So for me, I would still target 1 to 2R unless, again, you have specific data supporting the ID right there. If that makes sense. Okay, show 2 candle rejection live, please. Of course I can. Of course. This 2 candle rejection right here. So what is 2 candle rejection? It's quite straightforward. It's quite simple, you could argue. Right there. And it applies to arguably, to any PD right there. Does that mean it will work 100% of the time? No. But in my opinion, from all the concepts that we use, I think 2 candle rejection is arguably the best, because it's the most accurate, you could argue. But right here, if we take a look at any of these PD rates, fair value gaps, swing highs right there, then what do we see? We see that price action essentially has 2 times it can reject. So hence the name 2 candle rejection. If the first candle is not a rejection, like we, for example, see with this swing high. Once we trade above this swing high, the first candle is clearly not a rejection above the swing high. And the second candle can sweep the previous candle high to then continue lower. Or we see, for example, this fair value gap. If the first candle is a rejection, the second candle should follow through. If that doesn't happen, then 2 candle rejection is potentially failing right there. So that tells us which PD rates are then being respected, which ones are being disrespected. It helps us with a daily bias. So right here, for example, fair value gap, first candle, is it a rejection? You could argue it isn't. I would agree it arguably really isn't. But what we see right here, second candle is then the rejection. Okay, perfect. Then we see right here, this. We see the first candle, I would argue this is more of a rejection. So then the second candle should follow through right there. That's two candle rejection. And if that doesn't happen, because based on that, we're going to have a rejection high. If we then have the rejection high and we start running it, we're disrespecting this PD rate right there. So that means it's clear to move towards, for example, the next PD rate that we have, the high right there. Oh, that's a very luxury problem, to be honest. Dream chasers. If you have a perfect daily bias, but you didn't take an entry in the lower time frame, that's a luxury problem. Because it's all about understanding where is the interesting area to trade. So once you, for example, are really mastering the daily bias and you can understand it very well, then all we need to see is, okay, where's the consistent area that we can enter? Now we call that an area of opportunity or a context area, for example, in the MMT as well. But that's a luxury problem. That's a very good problem. Let's put it like that. Because then you just go over the times where the daily bias was clear and then go into the lower time frame, see, okay, how or can I find a consistent pattern that I can now enter on, if that makes sense. Let's see. Okay, gold. Gold had a daily fair value gap that was a 4-hour rejection high. Why was the 1-hour rejection and run enough instead of the 4-hour rejection high and then run? A daily fair value gap that was the 4-hour rejection high. Why was the 1-hour rejection and run enough instead of the 4-hour rejection high and then run? Let's see. Let's see. So I saw some other people mention this as well. Do you mean the fair value gap against us? Because for me, we didn't have a fair value gap against us, if that makes sense. So it was always the 4-hour right here that we had resistance on. So the 4-hour right there, 4-hour right there as well, and 4-hour right there. So if we take this example, and I assume you're aiming at this example or maybe this example right there, because right here, what we see is, again, we're not only doing this on the 1-hour, for example, because if we take a look at the 4-hour and take into account the 4-hour could still create rejection, then this right here is the candle that we could still sweep based on two candle rejection rules to then continue lower. So if we see right there that we are running that already to continue higher, then this is already enough, if that makes sense. The same if we, for example, this is a little bit more nuanced right here, rejection high. Okay, on the 1-hour, if we now start running this already, this is already enough to continue higher, if that makes sense. Because we're not sweeping the high anymore, if that makes sense. Almost all-time high, almost. It's looking like it does want to continue higher towards an all-time high right there. Gold. All right. I never really did that, JB. No. Could potentially be interesting. Never really did it. Let's see. How can we use economic calendar as a roadmap? This Sunday, we're going to have a video on that. This Sunday. We'll dive into that specifically as well. It's a little bit more nuanced, especially with the current data that we have. So we'll dive into it. How to trade all-time high. There's a perfect video on my channel about that. Since we may continue the move without mitigation of a fair value gap, at what point do we stop looking for retracement and join whatever price action we have when there's nothing preventing us from continuing higher? That's it. So again, try stop forcing the retracement back into a fair value gap. What you really want to see is you want to see if there's nothing preventing us from continuing higher. So for example, right here, if we take a look at, let's do ES. We have this weekly fair value gap right there that we could potentially retrace back into, right? Okay. As long as we have something, so we were respecting this fair value gap, we were respecting this fair value gap, now we are potentially disrespecting this fair value gap. As long as we have these fair value gaps that are being respected, we could potentially retrace back into it. And then we can continue higher from it, etc. But if this fair value gap now gets overtaken right there, there's nothing preventing us from continuing higher anymore. So that means price is already likely to continue higher without first retracing back into the weekly fair value gap right there. That's important to understand. And that's what has happened a lot of times. For example, earlier with the monthly fair value gap right there, it happened, I believe we have a couple of daily fair value gaps right there to continue higher as well. But essentially it repeats right there. We had it one time as well. If that makes sense. Lottie, let's see. Could you go more in depth about runs and sweeps of rejection highs and lows of fair value gap and two kind of rejections? of the rejection highs and lows. For example, on gold and Nasdaq on the 4-hour time frame, for sure, for sure. Okay. If we first dive into gold right here, if we want to, so I need you to understand something. It's essentially a whole inception of fair value gaps and two candle rejection, right? Because the way this all comes to, I'm not sure how to mention that. The way this all comes to fruition. So the way this all came to fruition is fair value gaps. That led us to understand candle signs. That led us to understand then two candle rejection. So what I first need you to understand is that if we are running a rejection high, then what are we doing? We are disrespecting it. It's the same thing. If we are sweeping a rejection high or any swing high or anything in general, then what are we doing? We are respecting it. So when I refer to we need to run a rejection high, we need to disrespect it. How do we know if we are disrespecting or respecting PDRs? Two candle rejection. So for example, right here, if we have this rejection high, this is the rejection high that we need to run in order to now have a clear path on gold to continue higher. And we are already running it. So right here, from this rejection high right there, it just becomes a story of two candle rejection again, if that makes sense. So here, the first candle is somewhat of rejection, not really. We could, in the worst case scenario, sweep the previous candle high to then continue lower. We don't sweep it. We already continue higher. So that means that two candle rejection right there is already failing. And that means the rejection high is getting run. And that means this is getting disrespected. And now we have a clear path to continue higher, if that makes sense. That's essentially what it comes down to a lot right there. That's the objective way of seeing if we are running a swing high or if we are sweeping a swing high or what are we doing at that moment in time, if that makes sense. So that's quite important to understand. The same way if you go over these highs, for example, we're respecting it right there. We're sweeping it. Why? Because two candle rejection is intact right there. The same with this swing low right there. We're sweeping it because we are respecting it because two candle rejection right there is intact to continue higher. Here, we are running the high, disrespecting it because two candle rejection is failing right there, if that makes sense. So that's really how you can then start understanding if we are running or sweeping. Now, I can explain all of this and it's nice and all, but I need you to understand that a lot of this also you need to dive into your chart. So mark out all of these swing lows, swing highs, every single one that you see. Diving into the lower time frame, it doesn't really matter. Mark out every single one that we have right there. And then slowly what you'll start seeing is you'll start seeing a pattern. For example, right here, swing high. Okay, two candle rejection is intact and we start failing. That means we're running it right there. Okay, here we are respecting it. Why? We're two candle rejection is intact right there. Here we disrespected arguably, but then we fail to respect the fair value gap to continue lower right there. And if you start doing this, you'll start seeing it very clearly, if that makes sense. No worries, as we wind. No worries, no worries. No worries at all. Take care. Let me know, Lottie, if that makes sense. If it doesn't, of course, feel free to ask again. Hello, Trey. I trade after the 75% level is tapped within the context area. Let's say I'm trading a daily context. Time for my alignment is daily, 1 hour, 5 minutes. Something to get a 4-hour value gap. What to do? 4-hour value gap is all right. That's all right. 4-hour fair value gaps in the way you trade, so specifically tied to you as well, are the nicest if we are close to a certain target. So for example, right here, whilst we continue lower and we are close to, let's say, this target right there, then the 4-hour value gap is very powerful right there. But a 4-hour value gap, if this is the target right there, and you're trading this 4-hour value gap, is not that powerful. Then you might just want to use the daily right there to then potentially continue lower. If there is a daily value gap, then you only, or well, let me say it clearly. If there's a daily value gap and a 4-hour value gap, you only use the 4-hour value gap if the target is very close and there's no reason to create or retrace at that moment in time back into the daily value gap first, if that makes sense. Other than that, you want to use the daily value gap right there, if that makes sense. If that makes sense. Thank you, Anonymous. Thank you, thank you, thank you. Sir Pickle was a student. Let's see. For Nasdaq, I had bearish buys on the daily. Okay, once the swept/rate happened, and the second daily candle was bearish close, but couldn't capitalize the third candle. Okay, Okay. I think it ties a little bit back to what we mentioned earlier as well. What I think is very important right there, if you're looking at NASDAQ right here to continue lower, take into account these time frames that we have, monthly, weekly, which were still very bullish. So what you'll notice is if it seems like we want to continue lower right there, oftentimes this is very unsustainable. It's very rough price action to continue lower, if that makes sense, where we don't really respect the fair value gaps right there to continue lower, creates more of this consolidation. So something for your data, if that makes sense. Perfect, Lolly. Perfect. Oh, I missed it. Perfect. All good. It's going well. Let me see, Anonymous. How's the piano going? It's going well. Thank you, Lottie. Thank you. Regarding the law of 7, is journaling meant to free up your brain, which is overloaded with tasks, and make room for psychology? Yes. So usually what tends to happen is, this is why, for example, people also like to journal or like to, for example, dump everything that they have in their mind, to write it down, etc., because it frees up your mind a little bit. So at least the way I imagine this is that when you're trading, your limit starts to slowly fill up, if that makes sense. So your brain starts to fill up slowly, and eventually it's going to reach its limit. When it reaches the limit, you might overtrade, you might revenge trade, etc. So our goal is always, when it comes to trading, in general in life, I would argue, is to not reach that limit, or very slowly reach that limit. Now you can do that, for example, by also using alerts, so not looking at the chart actively, but on top of that, also journaling, so seeing what is going on. Hey, can I journal my thoughts right there? And that way you decrease the amount of thoughts that you have in your mind again, and that way you have more room towards the limit again, if that makes sense. If that makes sense. It's a good question. I like that question. I learned a few songs on the piano. Yes, I can play some a tiny bit of Interstellar. I really like that. Let me see. How do you know that, actually? I forgot I mentioned that piano. How do you know that? You're spying on me? Let me see. Let me know if that makes sense, by the way. Although after rejection from Verweigert and order block on the daily, then I was looking for buys, but the 1 hour didn't support anything there, so no setup there. Perfect. I'm not sure if it's a question or a statement. To me, it feels like a statement. Perfect, yeah. So be it. It's not always going to be a trade right there. You wait. All good. Let me see. Now I'm looking at bullish buys with accumulation currently, so looking for distribution in the coming week. Okay, thank you for your statements. Does my thought process / trading plan is mature enough, like the way I am looking at the charts? I'm not sure who you are. I'm not sure. What do you mean with that? Does my thought process, trading plan, is mature enough, like the way I am looking at the chart? What does that mean? What do you mean by that? Okay. Head engineer. Let's see. I did this one. Let's see. Okay. So the less popular the questions become, with all due respect, but also the worse the questions become. This is why the most popular questions are on top. Let's see. So if you do have any good questions that you agree with, then feel free to give a thumbs up right there as well. But again, some of these questions are arguably not even questions right there. Let's see. Hans Zimmer. Yes, correct. Okay, let's see. But then I get stuck in a loop, like if I find an area of opportunity in the 4 hour, going lower to see the 1 hour swing high or for Verweigert, and then go to the 50 minute and see if there's any resistance. How do I enter on that? That's a good question. Okay. So what is important to understand right there as well is that when you find an area of opportunity on the 4 hour, this going lower, there's not really a need, if that makes sense. So the higher time frame area of opportunity right there, that's the important part right there. That's the important part you want to wait for. So also, if you go down time frames and you're waiting for an area of opportunity, the lower probability it becomes, if that makes sense. So if you're waiting for an area of opportunity on 4 hour that hasn't been met yet, and now you're going to the 1 hour, the 50 minute to find new areas of opportunities, the lower probability it becomes, if that makes sense. That's very important to understand. That essentially, you want to wait for this one right there, that one, and that just requires some patience right there. And of course, once we reach that area of opportunity right there, that's where you, for example, can go into the 1 hour, can go into the 50-minute right there to potentially find another area of opportunity. But that's very important. Nice, JB. Nice. You need to teach me. A grand piano. That's very cool. Let's see. Dankjewel. Wie is dit? Dankjewel. Thank you very much. Let's see. Second question is, if someone just trading one pair, then how should we approach this no resistance area of opportunity condition? The same way, arguably. So that doesn't really change. That's the same way. So I need you to understand, it's a universal rule. So area of opportunity is a universal rule. Because on any single instrument that you trade, we're always going to be, and this is the goal, right? We're always going to be trading in between PD rates. So we're going to move from one PD rate, disrespect one PD rate, move towards the next PD rate. Or respect one PD rate, move towards the next PD rate. It's a universal rule. That happens on anything. That happens on stocks, happens on crypto, happens on commodities, happens on metals, indices, Forex, everywhere. Because we always create PD rates, and we're always going to be moving in between them. So that's quite important to understand, because then even if you trade one pair, that's what you're going to be waiting for. So for example, if you trade, let's say, a euro US dollar, okay, if we disrespect this swing low, that means we now have a clear path towards this fair value gap right there. Okay, so what does that mean? That, well, you can potentially go into the lower time frame right there to find the 1 hour. And this right here is a short-term opportunity. Could you have capitalized on that? Well, that's a very, very, very small area right there. So most likely, no. Okay, so if we now look at this swing low, for example, if we disrespect that, we can now continue lower towards, for example, the next lows right there, if that makes sense. So even if you're trading one pair, it's the same thing, if that makes sense. It's the same thing. It's a good question, thank you. Hello, Darren. Let's see. Can you use the 50 minutes as your main time frame for fair value gaps and to get an objection, and then use the 1 minute for your entries? You can, Darren, you can. But what is important to understand is you need to see how profitable that is for you as well. So for example, if you go into the 15 minutes right there to then use to get an objection and understand, I can see how that could work, for example, right there as well. I can also see how it becomes a little bit easier to understand and higher probability once you do take it into context of the higher time frame as well, if that makes sense. But overall, I can see that. Yeah, I can see that. Let's see, Ali. Let's see. On a 4-hour swing high move, which lower time frame confirms sweep versus run? What rejection depth to expect? And which time frame is the best for the entry? It's a good question. Now, the 4-hour, so the lower time frame, if you use a 4-hour swing high, the 4-hour token rejection is also going to confirm if we are running or sweeping it, like we talked about a little bit earlier, if that makes sense. You can use the lower time frame as well. There's not one specific lower time frame. You just need to take into account the further away you are from the same time frame. So if you go from the 4-hour to the 1 minute, it's going to take longer. So it requires more confirmation before you can say if we are sweeping or running it, if that makes sense. So staying on the same time frames, 4-hour and the 1 hour, that's a little bit better, in my opinion. Ah, thank you. Okay, that makes sense. I think I remember this actually, yeah. Okay, thank you. Let me know if that makes sense, Ali. All right, let me see. Lottie. Last one for today. Then we're going to, well, Sunday we'll do the same thing again. I mainly trade NASDAQ. Could you help me out to understand when I should begin to look for a setup on a red folder Newsday versus equity open when I already have my bias? The moment it sets up. So the moment you have your setup setting up, if that makes sense, that's the most important part. And if you then have a Newsday or equities open right there, I would just watch out for 9:30. That's a little bit, when you have equities open, that's a little bit tricky. But the moment that setup presents itself, that's the most important. That is the most important part, if that makes sense. So that's something you want to focus on just when the setup actually happens. Let's see. Let me take a look at this one as well, actually. Let me know, Lottie, if that makes sense. So for me, the setup is more important than whatever the news is telling us at that moment in time. Of course, depends. Big 3 news events, watch out. I'm constantly gambling on Forex, currently 4% up, okay, but I can't stay away from the charts. How can I avoid this trap, especially with 40 trades in 5 days? That's a lot. Yeah, that is a lot. then it's still quite a miracle that you're up 4%. What I do think is very important to understand, have something else to do, Mr. Bob. So have something else to do. Say your alerts. Have something else to do. Just do something else. Start learning a hobby. Start doing something else, if that makes sense. So if you don't have anything else to do, then oftentimes you'll just look at the charts because there is nothing else to do. The same way, a dog sleeps because if a dog is not playing or doesn't have anyone to play with, the only thing it can do is sleep, right? So if we as humans have nothing to do besides looking at a chart, then the only thing we are going to do is look at a chart. So do something else. Do something else. Learn a hobby, learn a skill, start coding, whatever interests you, if that makes sense. Start a business beside it, if that makes sense. Whatever interests you, do something else, if that makes sense. That would be my best advice. All right, team. Sunday, we are going to continue Sunday, same time as today. So that's 2 p.m. New York local time. We're going to do a forecast. We're also going to dive into these questions. Make sure to be there and bring your best questions. Let me know if you struggled with anything. Write it down. Think of it. Ask me. And the best questions, of course, get picked out again. Thank you for all the great questions today. I really appreciate that. Again, I can't give good answers if there's no good questions. Thank you, everyone, for being here as well. Sunday, we have a video and live stream. So the live stream is going to be at 2 p.m. New York local time. The video is going to be a little bit earlier. We're going to dive into the data that we have as well. Thank you, everyone. Take care. Have a great weekend as well. The start of your weekend. Take it easy. Don't go too crazy. Reset. Get ready for next week. Thank you, everyone. Take care.